All right, Matt the Mortgage Guy here, recording a quick video on when should I choose my mortgage lender. Now I'm making this video because I've seen a little bit of a trend where a lot of folks are waiting till they're in contract and then they're running around crazy shopping for a mortgage, getting different quotes, looking at stuff and trying to read these elaborate quotes that are all in different languages to figure out which is the best deal, choose it and then go. And there's a better way, I promise you. So before I get into it, 96% of you are not subscribed. Good quality mortgage information is what you came for. That's all you'll find on this channel. So go ahead and smash the like button, subscribe, hit the bell, leave a comment, do it all. What happens when you do that, good mortgage content gets out there, good educational stuff that's gonna save people thousands of dollars gets out to the universe. Those thousands of dollars then get spent in the US economy. The economy recovers, everyone wins. This is like my own personal stimulus. So do all that stuff if you would, please. If not for me, do it for your country. So without further ado, I'm going to talk to you about when you should choose a mortgage lender. And this has nothing to do with, and I already see the comments where they're like, oh my gosh, you're just saying that because you don't want somebody to shop and you don't want to lose a client. It's not just me. I'm telling you, when you call me and you're in contract and you've been working with somebody for a month, I don't want you leaving them at the 11th hour either. And it's not for that person. It's not for me. It's for you. Most of the mortgage advice I'm giving is to help the consumer, because ultimately, the more I serve and help, the more my business grows. So here's my advice to the consumer. When you're thinking about buying a house and you're getting pre-approved, you've got the opportunity up front to look at a couple different lenders to say, give me your pricing on February 23rd. And then on February 23rd, you've got lender X, Y, and Z. That's the pricing. It's gonna change every single day, but it's gonna change in sync, right? This lender that was slightly higher on this day is gonna be slightly higher 2.5 months from now. And this lender who was better priced because they're a broker and have less fees is going to be better 2.5 months from now, just like they were on February 23rd. So do whatever you're going to do at the end up front. By doing this, you give yourself a couple advantages. One, you're not in a big hurry. So if it takes a lender a day and a half to get you back the information, you're not scrambling and, oh my gosh, I wrote a 21-day contract. Now I've got 19 days left. I got to decide who I'm using. That is truly detrimental to you, not just because you're scrambling and you're stressed, but because when you get into contract, you've signed something that says, I agree to release this contingency on this day and release this contingency on this day and close 21 days from now. If you burn days shopping, you're ultimately putting yourself at risk, losing your earnest money deposit, having the seller back out. In a market like this where the seller's got umpteen backup offers, if they know that they have a backup offer that came in right after they accepted yours and it's 10,000 more, they'd love an excuse to cancel on you. So 3 or 4 days in and you haven't ordered title fees, you haven't got things rolling with the lender, give a seller an excuse to cancel on you. Don't do that to yourself. So instead, here's the answer. Talk to 2 or 3 lenders if that's what you're gonna do. Find someone you like, you trust, and who's shooting straight and giving you numbers. I've made tons of videos on how you compare apples to apples because you're going to get different estimates that look totally different. Our estimates that we send out from my office look exactly like a loan estimate, like the disclosures you're going to get when you're in a loan. So it's very clear what's in box A. Box A is the only box that's controlled by the lender. There's points or there's not points. There's an admin fee or there's not an admin fee. There's a processing fee or there's not a processing fee. Other lenders have other stuff in there. I don't even know what they call it, but they add stuff to box A. Your rate and the fees in box A is the only thing controlled by the lender. All the other stuff is third-party stuff. Title fees are going to be the title fees no matter what lender you use. The prepaid escrows paying into tax insurance, no matter who you use, that's the same. Unfortunately, people, they get blinded by certain stuff. I mean, I can't tell you what I've seen, but I'll tell you, beware. I've got people that are like, hey, this dude told me it was $2,600 a month. And I look at the quote and the homeowner's insurance is $100 less. And I'm like, you think you're gonna get that price house insured for that much? I don't know. I said, what do you think the insurance is gonna be? And we just had a frank conversation. Oh, so the $100 that his payment is cheaper is because he undershot the homeowner's insurance by 120. So if you align those and you compare apples to apples, now I'm $20 better. And oh, I didn't realize the mortgage insurance with you was 68 and they've got it for 110. Oh, mortgage insurance can be different in different places? Well, yes, sir, it can. Little things like that. You just have to flush all that out before you decide who you're going to use. And do that up front, then you have less stress. I like this person, I trust this person, they shoot straight, they looked like the best option on that day. If they're the best option on that day, they're going to be the best option when you get into contract. Then you've got all your information with them, you've got pre-approved, they've shown you estimates. Before you submit an offer, maybe I send you something that goes, here's what it looks like at 480. Just so you know as you're submitting exactly what you're going to get into. Boom, you're in contract. We get the contract, we get the title information, we order fees, we disclose, we're off and rolling. It's smooth. It's better for you, it's better for the lender, better for the realtor, better for the universe. Do it the right way. The last thing you want to do is scramble, because what you're going to ultimately get, and trust me, I've seen it time and time, is either the biggest liar who overpromises, and then once you're in, you're in. You're 3 weeks in, you've paid for the appraisal, you've paid for inspections, you're in with this lender, you're not backing out. Things are going to change and you're just going to be like, gosh darn it. I knew that sounded a little bit too good to be true. He was the biggest, he had his sale hat on that day and he really needed that sale. So promised it, you can't go back now and can't find that person online. They don't worry about referrals. So you can leave a bad review if you want, but they're not worried about that anyway. Avoid that. Get the stuff up front, compare it apples to apples, decide who you're going to use, decide who you like and trust, because then another thing, and then I'll end this video to not make it too long. When you're submitting offers, you're attaching a pre-approval letter, a quality lender, especially in a super competitive market like right now, is going to call the list side. Hey, listen, I've got Joe Schmo's application over here, Joe and Sally Sue, well qualified, W-2 employees, 800 credit score, plenty of money in the bank. They're not worried about the appraisal. As you can see, they wrote a clause in there where they're waiving the appraisal contingency because no matter what it appraises at, they got the money to make up the difference. This is going to be a smooth one. That's the type of stuff I can communicate to the seller, help you get your offer accepted, and then once we get accepted, we're off and running. Versus a pre-approval letter with somebody attached to it somewhere out of state and then may or may not be using them. I don't know. I'm going to shop once I get into contract. Not the way to do it. So get your lender dialed in. Let them be an asset. Let them educate you so that when you're putting in offers, you know exactly what you're getting into. And that's that. Thanks for watching. Appreciate it if you made it this far. Anywhere in California, I'm happy to help, happy to lend. Matt, M-A-T-T, at mattthemortgageguy.com. If you're outside of California, shoot me an email and I'll send you a referral to a great broker, whatever state you're in. Thanks for watching.